We are now witnessing a 2-month-long distribution breakdown on Nasdaq. You can see here it was very aggressive to the downside all of last week. And if you remember, in the last video we posted last Sunday, I was actually looking for some type of a dip buy because I believed that the VIX was a little bit overblown going into the weekend. That did not pan out in any shape or form from last week. You can see here we did start off the week, at least here on QQQ, with a gap and crap setup, which basically means we had a gap up. On the day, we opened above the previous close from that previous Friday, and then price just continued to fall throughout the entire day. That's a very characteristic sign of continued weakness. So after this close on the day, it just was a sign that momentum was definitely not in favor for upside. So personally, my thesis from the last video was void for sure after what we saw happen early last week, which means that I have to look for alternative trade scenarios for this week, because as traders, we're not going to get every single one. Of course, it's not fun. We do take losses like I did last week, and I was wrong with that general thesis. However, we do have to keep moving forward, look at the data. In this case, at least just based on flow, it actually was pointing for more downside last week. I didn't see anything insane in terms of overall premium for SPY heading into the weekend, kind of why it wasn't really on red alert for me. But something I did see, at least for this week, that is on red alert would be IWM. We saw a ton of put flow, not only on Friday, which is what we're looking at right here, but also if you look at the historical flow tab and go for all of last week, go to IWM, and I have it filtered, by the way, for above 500,000 in premium. You can see here there's a ton of put flow, like a ridiculous amount. We haven't seen put flow like this on IWM since like 2022, if you remember that time period during that correction in the market. But a lot of bearish flow overall, and there's a lot of premium behind it. You can see 2.2 million as you get into the middle and latter half of the week. You can see just consistency above 1 million, above 2 million in overall premium. A bunch of them are also above the ask as well. You can see here these are highlighted in gold because they are above the ask. They're highly unusual and relatively close in expiration. These are only about 2 months away in terms of the expiration date on each of these, and these were also out the money. That's another aggressive sign. So all of the signs of a bearish aggression are here. They've been here for the last couple sessions now, and that's certainly something that sends alarm bells in my mind, at least for IWM, which likely means it's going to see some type of continuation. The first thing I looked at when I looked at the daily chart here this weekend was just basic daily moving averages. The first one that at least we're closest to here is the 200-day moving average. So this is the black. It's probably not a good color to choose for it. That's what I've had for a while, but at least for videos, it's kind of hard to see. But it's basically sitting at around 189 mid at the moment. That's likely, at least in the short term, a target for IWM. It'd be beautiful if it had a gap down to around this level. It'd likely lead to some type of short covering in the short term. However, as long as we remain above, this is likely going to get pulled down to around this range. Also, probably something that's a target for at least one of these whales that have been adding puts, because we are getting really close to that level of around 189. But at the moment, based on last week's weekly close as well as all of these daily closes, IWM looks very bearish. Now, also, we do have to be careful of relief bounces just because things are starting to get very oversold. Even if you use something as simple as RSI, let's say, like on the S&P 500, RSI is just about oversold right now. As you can see here, it's about almost 30. So that's about that oversold level. And typically when you see an initial test of an oversold value on the RSI for the S&P 500, it tends to have some type of an abrupt relief bounce. If you remember in 2022, there were a variety of short covering rallies that we saw. A lot of those started with RSI getting oversold on that initial test, and those led to aggressive uptrends, at least in the very short term, before downtrend continuation after. So that's something we need to watch out for, at least on IWM here, because it's going to get carried in sympathy with the rest of the market, even if it looks a bit more bearish. However, the current state of affairs, there's a lot of bearish flow to back it, and that's just something that personally gets me interested in taking some type of a short setup on it. I'd like to wait for a certain level to get hit. Some of the levels I was looking at just based on the daily chart, well, one, we have a valid resistance over here. This was mini distribution before we saw some downside after. The reason I like this level, roughly around 198, is because of how many times it was tested within a very short span of time. So you can see here, it was tested on January 23rd, the 24th, also tested on January 29th. We had a gap down the following day, which means that this was a failed breakout, which is a very bearish sign. So no surprise we saw this massive downtrend candle 2 days later, but we also saw rejection here on the 30th as well as the 31st. If we see some type of relief bounce in the market, which I'd say is highly likely, even though, of course, my read last week was wrong, I say it's highly likely we see a relief bounce just because we're getting to those oversold values. If we do see something like 198 again, that would be a prime short setup on IWM. Now, of course, these guys that are in their current positions are probably just betting on straight momentum down. I don't like to trade when things are getting this oversold. So this is just something that tells me they're still interested in downside. However, for my own preference, I'd like to wait for there to be a bounce to short. Now, you might have a different preference. You might like to trade with the trend, kind of like these whales are doing, and can trade maybe intraday, take a short setup with tight risk, and make sure you have tight risk when we're this oversold now, because those rallies, like I said earlier, can be very abrupt. But if you use techniques like that, then nothing to say that you can't short with these whales, at least on an intraday basis. Some of the levels I was looking at least for intraday, again, I don't want to trade this on an intraday basis, but some of them I was looking at was if we had a potential short-term breakout of this downtrend. You can see where we closed on Friday, right on this downtrend. Let's say we have a gap up above tomorrow. That's likely going to lead to about 195-ish for upside just based on the downtrend break. Then we have a valid supply zone over here. I'd characterize this as a potential rejection spot on an intraday breakout of this downtrend. That'd get us back up to where there clearly is a lot of supply, because you can see here this wick, very high wick from April 16th. And then over here we had a gap and crap, the one that I was talking about on QQQ earlier. That's also a sign of weakness. And then over here we also had a retest and a hard rejection off of that. So I'd assume at least if we were to have a retest this week of the zone, it would lead to some type of rejection as well. Risk reward is also prime here for IWM, because your risk would be a close on the 15-minute to hourly above 195.50 roughly, because that would get this out of its rut that it's basically in right now. But as long as it stays below, we're going to see some type of continuation. That is likely what these whales are betting on. So the bias, at least for the moment and into this week, would be bearish. So as long as we stay below certain levels like this supply zone over here, it's likely going to continue with that downtrend until, at least in the short term, the retest of around this 200-day moving average at roughly 189. So that's one of the things that I was looking at for this week. Something interesting, because it's not that often you see flow this aggressive to the downside on IWM. So certainly something you want to look into. Another thing you want to look into for this week would be dark pool data. Now, what's very interesting, if you've been watching these videos for a while, especially since the start of this year, we saw a lot of dark pool premium on SPY all the way up here, and I'll show you visually, all the way up here in this range. This is a key sign of distribution. If you remember, I actually was characterizing that as distribution. Unfortunately, I got caught on the wrong side this past week, but still, I was looking at this as distribution. My thesis was an eventual breakdown in the macro term. We're now getting that. So we saw a lot of prints up here. It's going to be very hard for bulls to get back above this without continuing to see some type of large amount of premium as they go down. I'm not expecting a major bottom around here that just continues up and goes past where we saw the previous highs before. However, if we do see some type of accumulation around here, that can promote some type of that short-term bounce that I was referencing earlier. So one of the first signs that I see of that potential accumulation is right here, 3.3 billion at the 499.57 level. Now, obviously, we closed below this level. However, if we are able to get above it at some point this week or maybe next week, that can produce some type of a bullish bias, at least in the short term, for continuation, especially if tomorrow, let's say, you see the Twitter account and they post something like a large $3 billion plus signature dark pool print at even lower than 499, we're looking at potential accumulation before a short-term bounce. So that's something that I'd look into. Again, we need to get back above this level first, but if there is some type of accumulation down here and we see something tomorrow at, like, let's say 496, 495, kind of around where it closed last week, that's a good sign that there's some type of basing, there's some type of institutional interest, at least for the accumulation side of things, which can put some type of a halt for the downside for that short-term basis. So 3.3 billion, definitely a lot. Bulls want to get back above this ASAP for any type of a short-term rally to stick. But as for other levels that we saw last week, if I go to the start of the week and scroll down, you can see it actually was pretty muted overall. 2.5 billion is decent, but it's not above 3 billion. Saw that at 503. As I scroll down here, you can see relatively light, 2.2 billion at the 500 level. We really didn't see anything large until this 499 was hit. And also a little caveat to that, it was OPEX on Friday. So some of these prints, it's not like they're going to act the same as it would on a normal day. The reason I say that is we saw 3.7 billion at 495.20. This again was on an OPEX date, so I wouldn't characterize this as being accumulation just yet. If we see something like this, like exactly like this print tomorrow on Monday, that'd be beautiful. That would show me accumulation. But typically with OPEX, you see some type of rebalancing. Clearly, this was the closing price for the day, just about, because over here you can see we closed at 495.16 on the day. So there's some type of interest, at least on the closing price. So I wouldn't really put too much of an emphasis on this because it was OPEX. If we see continuation to this trend, though, early this week, Monday and Tuesday, that's potential accumulation. That's a good sign for bulls to see some type of relief rally. So that's something that I'm watching. Two main things for this week. One, IWM, potential short setup off of this supply zone here, backed by the bears. And then we have also potential short-term relief bounce on the S&P 500 if we can see some type of accumulation uptick from around this range, plus the fact that RSI is oversold at the moment. One last thing I'll show you here, something interesting. Nvidia put sell orders really started to have a major uptick into end of day on Friday. Now I'm interested to see if we see continuation of this early this week. And the reason I say that is because if you look at Nvidia's chart here, we saw a major breakdown to its own distribution, kind of similar to what we saw market wide, especially on Nasdaq, like I showed you earlier in the video. But we saw this distribution breakdown with the break of around 838 and then a major down day for negative 10%. A lot of these put sellers are likely looking to capitalize on the heightened IV to the downside because we had such an abrupt downside move. They're looking for some type of stabilization. They're looking to sell these weekly puts in this case for April 26th, which is the expiration for the end of this week, just because they know that the IV is heightened on those. They can take a lot more premium by selling these orders. What's really interesting though is the strike was 800 on these. So this was an in the money strike. Not as common that you see that unless they're pretty confident on that or it's some type of hedge strategy. That's why I want to see if we see continuation tomorrow on Monday. So definitely check with the Twitter account and they'll post if there is continuation in this, because it actually would be bullish from a stabilization sense for this week if we see a lot of put selling orders, at least this continuation to what we had on Friday. But just something to look into for this week, especially after such a large down day for Nvidia. That can show some type of relief to it if there's a lot of put sell orders that are hitting the tape. But regardless, this in a macro sense is a breakdown of major distribution. We're probably going to see more downside in the macro picture. Just in the short term, Nvidia bulls are looking for some type of relief. But other than that, as always, appreciate you guys watching this video, and I will see you next week.